how many of you out there are actually tired of blowing up your small trading accounts? I'm going to show you today basically what you can do to maximize your profits when you are into trades. But this video is really centered around stop losses, and because I see so many people out there who are positioning their stop losses maybe in the wrong areas, and I'm not here to tell anyone, how or to trade or where to place their stop loss. It's up to you, of course, but I'm telling you and letting you know my recommendation of when it comes to stop loss placement, where to place them, okay? So that you don't end up blowing your accounts multiple times because you're taking on major drawdown, all right? Now, some people, if you're trading supply and demand, they love to place their stop loss right back at the end or the area below an area of demand or supply, okay? Now, if you want to maximize profits and make money, I would recommend placing your stop loss at the area where the market rejects it at the zone. So whatever zone, supply or demand you mark up on your charts, okay? And for all those that want to receive more insight information surrounding the strategy and how I personally trade, and members of our Discord community as well. And let me stop right now and say, if you're interested in joining the Discord, go down below, click the link in the description, right where it says Discord, and you can join for free, okay? Now, I'm going to share some other information with you towards the end for anyone that's really interested in understanding the strategy, learning more so how I actually trade, surrounding supply and demand, and just breaking things down in detail so that it will kind of put you more so on the fast track and you don't have a huge learning curve when it comes to a simple strategy that may work for you, okay? You may want to become an elite or an ultra elite supporter, and it's a great community, very inexpensive. It's only pennies on the dollar on the day, but it's a lot of valuable information that I share with you surrounding supply and demand and how I trade. I basically give you my strategy and break it down for you. So stay tuned for that towards the end of the video. So first and foremost, when we're trading either supply or demand, what I like to do is I like to mark off my zones, okay? And I recommend to anyone out there who's watching, no matter if you trade Forex, options, stocks, futures, whatever the case may be. I'm a futures trader, but I recommend not placing the stop loss at the back end in the area of an area of demand or supply, okay? But this is a demand zone market. We have aggressive buying. And if you're kind of a newbie or someone that's beginner trader and you're kind of, not used to the terms yet, all supply and demand zones is where you have, this is a demand, aggressive buying, or supply is in inverse of where you have maybe like aggressive selling come to the downside right here. Now, the key to success in trading futures, I'm going to say that because that's what I personally trade, and I'm mostly trading looking at the NASDAQ, and I will trade the ES futures, the E-mini S&P 500. That used to be my go-to market, but we're slow months now. There are setups on the ES. I'm not saying that there's not. And it's a great market to trade, and not just that, but the margins are a little bit are actually lower in trading the ES. But it's a thicker market and it moves slower. If you don't understand when I say thicker, a whole lot more volume being traded there, and so the market is it doesn't move as fast. Okay, so you have to be a lot more patient when trading the ES. Now, again, what I'm saying here is market structure is the key. You have to get that side of things correct. What is that? That is basically means understanding which way the market is flowing. Now, please, recommendation, place your stop loss at the back end where the market is rejecting off of your zone or out of your zone. Like right here. This is a demand zone off the higher time frame chart. If I was trading this, which I did on Friday, I traded. I'll show you the trade right quick just to kind of go, show you that and move on. But this is a higher time frame demand zone, right? I don't want to place my stop loss right at the back end of of a demand zone here. I want to wait for the market to pull down to the area, look for the rejection with momentum push to the upside, and go long from there. So I'm interested once I get the rejection at the zone when the market retraces to it. My stop loss and I enter the trade is going to go at the back end here on the pullback to the zone, not down here. There's two places. You got the bottom end of the demand zone, and then the bottom end where the market right here where it pulls back to the actual zone. I don't want to place it right here because that's even a further away stop loss area. Okay, so what I like to tell people is that when the retracement back to your actual zones, especially off the lower time frames, okay, I'm just showing you this off the higher time frame what demand will look like. If this was a supply zone right here, okay, mark this up. Okay, and the market came back and retraced to my zone. I don't want to place my stop at the back end of the supply zone. If the market reacts right here, we got a pullback. This is aggressive selling. Retraces here. I'm looking to go short from here, and then my stop loss will go somewhere in this area here, not way back up here. Okay, that's going to help eliminate as much drawdown as possible. It's going to help eliminate, if you take a loss, more of a significant loss. Okay, and if you do that a few times. Every time you come back, the market comes back to your actual zone and you're waiting, you place your stop loss here and you say, I'm good as long as it doesn't come below the actual area of demand. If the market continues coming lower, if you ended up getting stopped out down here versus getting stopped out down here a few times with a small account, you're going to blow that account multiple times over, okay? And it's only going to take a few of those and then you're going to be like, hey, I'm done trading. So again, the key is to protect and preserve the money you have, the capital you have that you've worked so hard to put into your account to fund it so you can start trading futures. Now, anyone watching who's a beginner, please don't go out there and start funding, your own personal account. I'm not saying not to open up one, but please demo a simulation or go into simulation and back test and forward test strategies. And if it's, maybe not even the strategy that I'll share here on the channel, but maybe if a strategy you learn somewhere else, make sure you do your homework, okay? First and foremost, all right? So again, that's how you protect, number one, okay? Not blowing your account, okay, and keeping yourself in reserve of and being able to live to see the trade again, okay. Now, also what I want to share with you is this right here. Once you are into profit, okay, and this is kind of a tip or a piece of advice, part two. Once you're into profit and the market starts to move higher, and let's say it starts making higher highs and higher lows, if this was a demand area. When the market pushes up, makes a high and comes back and makes its next higher low, and then it breaks that most recent high as it pushes to the upside, move your stop up, okay? And the reason for doing so is because now you've locked in above the break-even point profit. So if the market comes back against you, and let's say for sure, if you got your stop loss resting way down here, and you say my stop loss, I'm gonna leave it right there, and you're into profit, why would you allow yourself to go from being in profit to being stopped out way down here? You're going to take a big loss, okay? So just for example here, I'm going to show you like the trade that I took on Friday. This was the markup. That was the actual zone there. It was a demand zone, okay, coming off because we're breaking structure to the upside. Again, structure is everything. And then the market pulls back. Now, if you can see here on the lower time frame chart, my 24 range, we are looking bearish on a channel to the downside, right? But overall, we're bullish. So when the market tapped into this demand zone, okay, off the higher time frame, that's what I wait for. The full-on strategy and how I actually trade, you can receive so much insightful information, valuable information, if you want to become an elite member, because that's why I actually break things down. Again, I'm going to kind of cover that towards the end of this video here, which will be in a few moments. Now, when the market comes back to my higher time frame zone, if there is a nice area of demand, say for example, a smaller area of demand on my lower time frame, I'll mark that up because I love to take what's called the zone within a zone approach, where we have a higher time frame zone and then a smaller, say 24 range demand zone that's on the inside of the larger time frame demand zone. Here we didn't, okay? We don't have that. We may have some low probability zones, and there's a difference of high and low probability. And if you don't understand what I'm saying, please spend some time watching the videos, and even maybe going a step further and becoming an elite member, all right, or supporter of the channel. And there you'll receive additional valuable content where I really go into detail about strategy. All right, so look here. The market taps the zone, the higher time frame. At that point, because we're bullish on the higher time frame, I'm looking for the market to start to push higher, right? I'm looking for it to break structure to the upside. It took out a swipe above these highs here pretty much, okay? This is structure right here, all right? Minor areas of structure where the market is breaking higher. So it's making highs, higher lows, breaking structure to the upside, leaving behind this aggressive area of buying right here. And it's a high probability zone. So when the market came back to it, I'm interested in going long from there. Now, again, remember about the stop loss placement when it comes to supply or demand. In this case here, this is a demand zone. This will be the demand bottom end of the demand zone. This will be the point at which if the market comes here, it reacts. I'm going to the upside to go long, right? My stop loss is going to go on the back end here. Now, relatively, the stop loss as far as where at the point of the rejection versus where the demand zone is fairly small. There's not much of a difference, but sometimes there could be quite a bigger difference depending on what the swing looks like as the market's pulling back to that actual zone. This could be a bigger swing. Like this could be something like this right here. I'm just going to show you. It could have looked like a bigger swing with a deep retracement and then broke structure to the upside. So now your demand zone is resting way down here, and your point of rejection could be somewhere right here, and then it takes off back to the upside. So then your stop would go like right here, back at the point of rejection, but your demand zone at the back end would be way down here. So it could be several points difference there, and that's what you do not want to take an additional loss on, is a 7 more additional points from here down here. Okay, so that's why I love to put my stop loss at the point where the market rejects or reacts at the demand zone, not at the bottom end of it. That makes sense. Okay, now what I'm talking about as far as being able to basically trail price and maximize your profits, it's where the market has broken structure, comes back to the lower time frame zone. So we got confluence here. Well, we do have confluence. We have higher time frame confluence and lower time frame confluence here, because we waited for the market to react off the higher time frame demand zone, and then we found an entry point after it broke structure, pushing to the upside on the lower time frame. That's part of a strategy that I trade, because we're bullish, guys. You got to understand which way you need to be trading. You got to understand that, because that's important. All right, don't just flip a coin and say, hey, the market looks like it's going up to the upside, I'm just going to get in and start going long, and you're just chasing price. So when the market pulls back right here, I'm going to go long when I get the rejection. My stop loss is going to go on the back end here. And then when it starts making these runs to the upside, like highs, higher lows, and breaking more structure higher, I'm moving my stop from here up to here. I'm locking in profit, because my break-even point was probably somewhere right here. Now I'm locked into profits, because now if the market comes back, okay, if it comes back here, guess what? I haven't lost anything. I probably made a couple points there versus losing, because now I'm trailing behind price. So my stop loss will go from let's say it was originally from here, making higher highs, higher lows. The first, pretty much the nice first higher low is going from here to here, breaks more structure, comes back, next higher low from here to here. My break-even point is way back here. Now I'm locking in and trailing behind price. This is how you can, like I said, can keep yourself from blowing up your accounts and being able to protect yourself so you can preserve your money and continue growing your account by this kind of technique or method. People that I talk about this to, or people that I share this on the channel, right? So there are people that are part of our Discord community have gained foothold of this right here, and they're testing it and using it themselves, and they like the actual idea of being able to how to trail behind price using this simple technique. Okay, but again, the video here today is just really talking about stop loss placement, some mistakes that a lot of traders actually do. That I see, again, they're always placing it at the back end of that demand zone. Why would you want to allow yourself to incur that much additional drawdown? All right, so please preserve your capital, protect your accounts, and try to stay in the game, because overall, at the end of the day, it's all about compounding. All right, compounding. Look, it's not about who gets to the end first. Okay, it's not about growing your account as quick as you can. It's about compounding at a slower pace. Okay, and leveraging smaller amounts of money. All right, because then you can start to build your account. Some people don't believe that when I say that, because they're so quick-minded to think that I want to grow this account in 30 days. Give yourself time, and you'll start to see from month to month how it slowly starts to ramp up. And I talk about this using the 5% rule. How it slowly starts to ramp up. Basically, after the third month, things really start to move pretty quick. Okay. But anyways, I want to share that with you. Now, if you want to become an elite member, what do you receive with that? Okay. You receive where I go into detail about the strategy, surrounding trades that I take, and post over on our Discord. I break them down so you grasp from like an elementary standpoint what I'm talking about when it comes to that zone within a zone approach, or the fact where we got confluence at a major level, and then we're waiting for the market to break structure, moving in the same direction, whether to the downside or to the upside. It's a beautiful strategy, guys. Supply and demand is a simple concept. It's nothing new, but some people trade a little bit different than others. I'm using range-based charts. Okay, why? Because I like the feel and the flow, and I can see things clearer using range-based charts. I don't have to worry about all them large, crazy wicks, small wicks, candles being different crazy sizes, all that. I don't have to worry about that. I can see it because range-based charts actually, how they move is based upon the amount of volume and which is, driven by the amount of momentum at a given time in the market. So that's what I like to see. I can follow, the volume. I can follow the flow of the market a lot easier. Now, again, what do you receive when you to become an elite member? There are two different basically tiers that you can actually, subscribe to or join, and there's different perks and rewards for each. To become an elite supporter, what you receive is the trade breakdowns, the video playlist, and a great video that I cover surrounding market structure. Okay, only for $6.99. There are tons of trade breakdowns there. The purpose of the trade breakdowns are to go over trades that I take, so that you can understand and look for similar setups. Just like that, but to also break it down so that you understand the setups as a whole, meaning in reference to structure, okay, in reference to where to place your stop loss, your profit target areas, and just why I chose to take that actual trade. All right. The better you understand that, the more clear it gets, the picture in itself, so that you can see and look for the same similar type setups. All right. So you're able to flow. Most people's problems when it comes to trading is that they have a hard time being able to read the market. All right, they can see the market's moving to the upside, we're breaking big swings, but when it starts folding back and pulling back, and now we got a bearish run to the downside, they're kind of confused. Are we still bullish? Are we still bear? Are we back bear? Are we turning bearish? So me breaking those things down to you, if you want to become an elite member, those trade breakdowns, you start to see and understand why I took those trades. That's the biggest thing, because everybody wants to know, you could hold someone's hand, okay, and they can sit right next to you, and you can simply go over trades, right? But the moment they break away from you, they have the hardest time going back to being able to see and understand what you just taught them or what you just showed them, right? So that's the purpose of the trade breakdowns. They don't go away. The video content is always there, and there's tons of those videos there. Plus, you also get that great video that I cover surrounding market structure and the video playlist, which are a series, a big list of videos that I share that are very important information. Probably some of the most pertinent video content or information that I've shared that really can truly help those that spend the time taking notes and watching them. All that for $6.99 a month. That's a deal. I'm telling you. Seriously. But it's up to you to choose one way or the other. If you want to take it a step up and also receive my live recorded trading sessions where I'm trading, I'm recording my sessions, I'm going through the rundown of the markets, looking at them from top-down analysis standpoints. You can see me engage in trades. I'll talk you through the trades, why I took those trades, So the recorded sessions, that's all it is. And you also have continuous access to that. Plus, you also receive market recap videos. So you get everything from the first tier, the elite tier. It rolls over. You get all that bundled, and you get additional content if you choose to become an ultra elite supporter, okay? Now, that's $14.99. And which is like 49 and 50 cents on the day. So pennies on the dollar a day, okay? We're talking about that's on a monthly basis. So that's up to you for all those that either they want the additional content and want to really kind of maybe possibly understand a strategy and want to really kind of dive deeper to see what, what's it all about when it comes to trading range charts using supply and demand. Come over to the Discord. It's free. You can ask away on the Discord. Now, again, if you're interested in becoming an elite or an ultra elite supporter, the link is down in the description portion of the video, okay? Outside of that, if you haven't taken time to already subscribe to the channel, please do so, okay? Because I share a lot of valuable content, and a lot of people are reaching out and continuously, reach out to me, DM me, or send me messages on YouTube or wherever, and they just thanking me for providing information and being, I guess, as open and upfront as possible, and thanking me for how the information I've shared has changed their trading, has changed how they see from a different perspective about trading supply and demand, a system that actually has been working for them, and hopefully it works for you too. But everybody's different. Everybody looks and views the markets differently. So, and some people come with a lot of baggage from things and strategies they've learned and try to mix and merge things. They get confused doing it. So you have to kind of undo things if you really want to learn, I'd say, the correct way to actual trade. I'm not saying mine's the best. My strategy is the best way by far. I'm just telling you, I trade it because it works for me. I like simplicity, not complex, Okay, so it's up to you to choose, all right? But again, if you want to become an elite member or an ultra elite, the link is down below. Subscribe to the channel. Click that like button right now if you haven't already done so. Make sure to turn your post notifications on before clicking or exiting the video. And I appreciate it, guys. I hope everyone's having a fabulous weekend, and we'll get back rock and rolling this week over on the Discord. Take care.